We're seeing something in the markets we don't usually see, where you have both the equity space in Japan and also the yen actually on the way down on the back foot. So is this the beginning of a decoupling between the currency and stocks in Japan? Bloomberg's Asia Cross Assets reporter Will Davis joins me right now. So I don't know, what explains this divergence? Is it a one-off? What's behind all of this?
There's a breakdown in a long-running relationship, really. Yeah. So if you look today, both are down, and actually, but this year, say you look at the topics and the yen, both have gained, and typically they moved in opposite directions. But this year we've seen a different pattern coming, because the yen is actually playing less of a role in influencing the stock market moves. The company earnings are looking better, the global economy is picking up, and so the signs are good for Japanese companies. Domestic demand in Japan and consumption is improving, so that's a helpful boost for the companies there that's offsetting the moves in the yen that generally, if it strengthens your Japanese companies...
Yeah, the usual narrative we do.
Yeah.
That yen stronger, obviously bad for equities. But there are caveats, obviously, when you look at what's happening now.
Yeah, I mean, they're not out of the woods yet. If you look yesterday, BOJ Governor Kuroda was saying, you know, there are still downside risks. Well, risks are tilted to the downside for Japan. So there's an issue there. You know, it's not all rosy for Japanese equities, but generally speaking, people who I've spoken to are expecting gains in the topics and the Nikkei this year.
Yeah, absolutely. You know, I think one of the consistent comments that we've heard the past 2 weeks or so is it's another way to really play this reflation trade when you have dollar-yen on the way up. But again, that's when you assume the correlation goes back and reverts back to the mean. You touched upon this a little bit. What's the outlook on the yen? What's the outlook on equities?
Well, the yen is looking likely to stay in range. You'd have thought it might weaken a bit, but there's still uncertainty. You know, if you look to Europe and the various elections going on there, other uncertainties, US, wherever. So there's still going to be demand for it as a haven currency investment. So it's unlikely to move too far. So people are saying between 110 and 120. That sort of seems to be the range this year.
Right. And guys, just to, I guess, highlight the point here, can we just get into my Bloomberg right now and just show this correlation chart? We just showed you earlier this widening gap between topics and the yen. I guess this is one way of looking at it. So obviously the correlation is not as high as it was before. It depends, of course, on your settings. But that being said, of course, it's still side by side. Hopefully, though, that breaks down, I guess, if you're an equity investor, because the yen is pretty much controlled by other things than Japan. So it's very hard to, I guess, pin your hopes on something you can't control, especially when it comes to your money.